All right, what's going on, guys? It's Dan here at StockAbility. So we're back with another video. In this video, I'm going to be talking to you about mean reversion trading and distribution and widening ranges in markets. So that being said, if you're new to our YouTube channel, make sure to like and subscribe. We try to put out videos on a weekly basis. If you're new to this, this is a good place to learn. If you have further questions, you can head over to our website. We have weekly webinars, a weekly radio show as well, which my partner Sam Evans leads on Thursday. So what I'm going to talk about in this video is essentially mean reversion and this concept of distribution in markets. What I'm also going to talk about is why right now in the markets it's a bad time to be a swing trader, and I'm going to try to kind of shine some light into this concept for those of you that are trying to swing trade or you're wondering, hey, look, when I'm putting on swing trades, why is that not working? Now, one of the things that happens when people trade in markets is they don't take into account, in my opinion, the overall distribution of markets or what's going on in the larger time frame. So one of the things I'm going to point you to, and I don't use it too much, I'm just going to give you some insights, is this concept of mean reversion. And you can go to Investopedia to look at this stuff. So Investopedia has quite a few stuff or things here. You can kind of read about mean reversion. I wouldn't dive too deep into it, but just get the general kind of idea of what mean reversion is. And this is something very similar to what's going on. So let me show you the markets as an aggregate here and kind of talk about it. So I'm going to use oil as an example, and I'm going to give you some more examples in this video to show you what I mean. So right now, basically all week long, the oil markets have been extremely volatile. Now, I like that as an energy trader. I like it as a futures trader, obviously, and obviously as an equities trader as well. So you had this large move this week, large move lower, 5% move higher, and then a 5% move lower. So what you're seeing is this massive volatility, these massive price swings in markets, okay? So this is really good if you know what you're doing in active trading. This is really bad if you're somebody who wants to look at markets that go like this. You pull back, you buy it, you wait, you hold it, and you pull back and you buy it, okay? So typically, and this is, it takes more research than just one video, what happens when markets get to areas of tops or where the momentum starts to die out is you get this thing called distribution, okay? And I'm going to show you what I believe is happening in the Russell 2000 as a concept of this idea of distribution in markets, okay? So basically for the past year or two, or even since COVID started, the Russell in pretty much every market was vertical, right? Right now, what's been happening for 2021 is you're seeing markets essentially do something like this. We're just in a wider trading range. And I talked about this in a video earlier this week in equities markets as well, okay? So you're not getting this. You're not getting a massive rally, a pullback, a massive rally, okay? Why this is dangerous, and the reason I'm bringing it up now is basically for the past year and even like 5 years, there's this mantra that goes out, stocks only go up, the Fed's going to save us, etc. And so what happens is if you get stuck in that mindset and you don't recognize that markets are in distribution or we're in a larger range, you start to put on swing trades when you should be putting on trades that last 1 to 5 days, okay? I realize this might be an advanced concept, right? And I realize some of you watching our YouTube channel only might be day traders that trade for 1 or 2 minutes. I don't agree with it, but whatever makes money, right? And I realize some of you only want to swing trade markets. You want to buy something and you want to hold it, okay? Not to be too rude, but again, the market doesn't care what you want to do. You have to adapt to market environments and understand there's situations where you can swing trade and there's situations where you have to be nimble, okay? I've talked to some of my friends the past 2 weeks, even our students, about this. And again, it kind of made me want to create this video because they're saying, hey, look, I don't think, the Fed's going to print money. I think we're going higher. Look, I could be wrong on this. I've been wrong before in markets. I don't have a problem being wrong. But I'm always erring on the side of caution, okay? So when they were saying this, we're like, hey, well, look, maybe it's not, now it's time to buy. Because I had a student last year do pretty well in Tesla. Maybe it's time to buy leap options on Tesla, okay? Do I think it's time? I don't think so just yet. I talked about the short on Tesla from 800 to where we are. It definitely could rally back into this. But when I look at markets as a whole, the approach that I take when I believe markets are in distribution phases, and I'm going to use Netflix next as an example, is the approach I take is I look at things from 1 to 5 days perspective, okay? I put on positions that last 1 to 5 days. Now, I know for some of you, you're like, well, you know what? I don't like this. I want set and forget trading. I just want to buy and hold. Look, I mean, I do too, but the markets, again, they don't care about what you want to do. You have to adapt to market environments. Does that mean you go to cash? I don't know. You have to decide that on your own. I'm just telling you when markets are distribution or they create wider ranges, it creates volatility. if you know how to use that volatility to your advantage, you can make serious money in markets like this. Okay, so my perspective changes from, and I do a lot of leap options trading. You're not going to see me buying leap options on equities right now because I don't think, and I'm going to go to Netflix as the example, I don't think based on the read of the overall markets that this is a time and point where markets, the trend's going to continue like it was the past 2 years. Right? Look at Netflix as an example, Amazon as well. Basically, this thing has been stuck in a massive, massive range for quite a while. Right? This thing is not doing this, pulling back and trending. It's not at all. Okay. You kind of see that with the SPAC stocks of past 6-7 months. You're not seeing that with major names. Okay. So when I look at that, and this goes into my analysis when I look at leap options trading in general, I'm well aware of what's occurring, right? Amazon's a great example of this. This hasn't really done much. It's been stuck in a massive range. Look at it from a larger term perspective. Massive rally, pullback, sideways, sideways. So what happens is, and this is the same thing with futures or oil, it doesn't matter. When markets distribute, it doesn't matter if it's energy markets, equity markets, whatever it is, you get these wide ranges. You have to change your perspective of short-term trading versus getting long-term trends. Okay, so that's a big thing to understand in markets. I kind of want to start the discussion on this and kind of give you guys some insights to how this kind of works. The other way you can see it and most prevalent is really in futures markets. Again, if you're a futures trader, you like markets like this. I really enjoy markets like this because, again, you can see the move you got today, right? This is already a 40-point move off the lows. So this type of trading is amazing, right, if you know what you're doing. But again, you have to understand from the equities perspective, right, you have to understand what's going on. You have to understand, hey, this might not be a trend pullback for move higher. And how do you understand that? Look at larger time frames, recognize how price action has been forming over 1, 2, 3, 4, 5 months, and try to see what their overall trend is. Okay, so again, I know a lot of you are new to trading that watch our channel. If you're only looking at technical indicators, if you're only looking at small time frames, remember there's a lot more that goes into this. The way I look at markets, the way I talk about markets, the way I teach markets in our wealth abilities class and our options abilities class is from a portfolio manager's perspective. So I look at markets as an aggregate. I look at multiple data points to make decisions and how I structure portfolios, whether it's swing trading or short-term trading. I take those things into account. So even if you're a day trader, I don't think having that skill set of looking at the markets from a 30,000-foot view is a bad thing. All I think it does is help you in your analysis. Same for futures traders. So hopefully this video helped. I would highly suggest take a look at mean reversion trading concept. Familiarize yourself with that. If you have more questions, head over to our website. We have a ton of free resources. We do webinars pretty much every other week. We have a weekly radio show as well. We'll meet my partner Sam, as well as one of our other coaches, Ryan, goes and talks on as well. You can go look at that information, kind of see what we have to offer. Make sure to like and subscribe to the channel. I try to put out a lot of videos during the week. Hopefully they help you. If you have questions or want to see a certain video, drop a comment below, and I'll be sure to try to talk about that in the next video.